Hi everyone, welcome to the Multifamily Deal Structuring Monday. Today our guest is Prashant Kumar. Prashant is an enthusiastic, passionate, and goal-oriented multifamily operator. He applies his 25 years of experience in corporate America to analyzing income and expenses, calculating net operating income, and calculating purchase price based on NOI and market cap rate. He acquires then holds stable income producing multifamily apartment complex in emerging US markets with long-term capital appreciation. He runs a meetup in New York and runs online masterminds with many groups. He does JV and syndication deals. Along with multifamily, he has a passion to purchase assisted living properties. In addition to his personal 84 units, Prashant currently holds equity ownership in more than 1,200 units. He lives in Long Island with his wife, daughter, and son. Here's the interview. Hi, Prashant. Welcome to the Multifamily Deal Structuring Monday, where we will discuss all about your first GP multifamily transaction. Thank you for joining us here in the show.
Hey, thank you so much, Jefferson. I really appreciate taking time for talking to me. I'm excited to be here.
Okay. Yeah. Thanks. Let's start with tell us about yourself.
See, Jefferson, as you know, I've been in multifamily business for about 5 years now, and I started from single family to owning a multifamily to doing a syndication. All that is 1 year worth of my journey. But I realized, as I keep progressing, I kept on realizing that the money is not sufficient. So I had to jump into the syndication business, basically. And the goal is to be able to expand at a not just at a faster pace, but to be able to do more in the time that we have. The primary reason is, when you are buying a property, you are restricted with the amount of capital that you have at your hand. And that is, irrespective of how much money do you have, your capital is going to dry up. Because it is going to dry up, you cannot move forward. If you want to continue to acquire more assets, you have to go into the syndication model where you have investors. Investors are investing with you, and basically you are able to use their money. Not just use their money, basically you are able to do more deals and grow your business. So within 1 year time frame, a 1.5 year time frame, I was able to, jump into multifamily syndication. I was able to join certain GP positions in many projects. We bought a 40 unit multifamily in Atlanta, but that was a JV kind of opportunity, a small deal. But we exited in about a year's time. We doubled our money. In addition to that, I was part of a GP syndication in many other deals. As we go along, we'll talk about them. Recently, I have, as I said, last year we acquired about 1,200 units. And besides multifamily, I have been looking into assisted living space also. So we acquired 3 single-family homes, 3 single-family businesses, basically, total 18 beds in California. So that was a pilot project that we did, and we are trying to acquire more. So single-family to multifamily, owning multifamily syndication, and we are doing some assisted living as well. So now we have 2 focuses. One is multifamily syndication and helping others to grow multifamily business. Number 2, assisted living facilities that we are into right now. Okay. So that's my introduction in total.
Okay, that's nice. Then, so prior to your multifamily, do you have any real estate experience on the single family space before you?
Yes, as I said, I started with single families. I bought 3 single family in my first year of my real estate journey. I became the real estate agent also, although I did not practice that. The goal was to do more, but yes, I did have some single family experience, but those experiences were not good. It was taking too long for me to buy buy a single family home. So I jumped into multifamily, within my first year of investing career.
Okay, yeah, that's nice. Then, yeah, where are you currently located?
So I'm located in Long Island, New York right now. Even though I don't do anything in Long Island, I mean I have single family homes here, but that's about it. I don't do my business in New York. There's nothing. It's just that I live here and I have two more homes.
Okay, yeah, yeah. Then, yeah, how did you end up in multifamily? I know like you discussed it briefly.
Yeah, I mean the basic idea is when I bought single family, um, it just took so long to buy one single family. So in a year, I was able to buy only three single family with a cash flow of maybe $400-500 in total, and that was not sufficient for me. So I had to do something different, and I was started to look into multifamily, and then I found a wholesaler, and that actually was a friend. So I bought a multifamily through him, and that's how I started multifamily journey. And then I jumped into multifamily syndication. So you kept on meeting new people. Every time you meet new people, you bring something to the table. You give them, you bring something to the table. They bring something to the table, and kept on partnering with new folks, new partners. That's how my journey started.
Oh, that's nice. Then, yeah, any limiting belief that you have, and how did you overcome it to get to your first deal?
See, right now, yes, I mean, limiting beliefs are always there. That's human psychology, right? I mean, everybody has limiting beliefs. And I had limiting beliefs also. And maybe I still have limiting beliefs, but I do want to overcome them. Um, I want to get into the deals where I need more capital. I mean, bringing the capital is the biggest challenge, right? But as you start doing the deals, you find ways to figure it out. um, in my mind right now, maybe we cannot do 50 million or $100 million deal, and maybe we can, but you know um, my challenge much I mean, there is some challenge there for sure. I'm, I'm not saying, I mean, I'm able to do 10-15 million dollar deal right now, but can I do a $50 million deal? That is my limiting belief right now. Um, have I overcome a lot of them? Yes, I have overcome a lot of them in last 2-3 years. When I started doing bigger deals, my mind kept on opening up, and I was able to open up, and uh, basically it's your mental horizon. You can think big, then only you can do big. You know, uh,
Yeah.
can I say that after like 4 years ago, could I think to buy property worth 3-4 million? I don't think I could have done that, but now it is possible. It's not that I have I have that much money, but I can still go out there and do bigger deals. So it's more of a mental capacity. Can you think that big? And by doing these some of these bigger deals, having the right partners with me, I was able to overcome such limitations. You know,
Yep.
that's how I answer the question.
Okay. Yep. That's good. Then, yeah, let's jump to the your first deal in multifamily. What's the source of this deal like?
See, the first deal that we were doing in Texas, that came through a wholesaler actually to us. And wholesaler, I think somebody had that under contract. Um, and I'm talking about a deal which actually, we worked on the deal, very difficult deal, which fell apart on the last day. But then, because of that, we got into another deal. So yes, the first deal was through somebody who wanted to do the deal but could not do it because it was difficult for them. We picked up that deal, and um, we were able to put it together. It was extremely difficult deal, through the wholesaler, of course, like 50% occupancy, and whatnot. I mean, you name it. We had all the troubles in that closing of the deal. And when everything was all said and done, the last day, we were bought out by our private equity partner. But that was the deal which taught me the most. I worked on the deal for 6 months, and in the end, it did not work out. We did not lose. The important thing was we did not lose anything in that deal. And that gave me the confidence, and then through that I got into other deals basically.
Oh yeah, what do you mean, like you bought out by a private equity part? So you hold, I mean, you purchase it then for 6 months?
So bought out means, the private equity partner that we had, somebody who was bringing a little bit more money, they didn't want to pursue the deal with us. They wanted to do deal by themselves, and we had no option because we had $500,000 hard, and it was evaporating next day morning. They said they will do the deal. And then we ended up, basically doing the deal. We ended up, taking our check back and give them basically. And that was the night before the closing. So that was kind of a sad thing that happened with us, but the good part of that, we did not lose our money.
Okay, so they at least just returned the money.
Yeah, he returned our hard-earned money, and he bought the deal, and he's doing the deal basically.
Okay, then which part of Texas is it, like this area?
This is Houston, Texas, basically.
Houston. Okay.
Yeah.
Then how many units was this?
I think it was 560 units.
Oh, 560.
Yeah.
So it's a big.
This was a big project. About I think it was about $15 million, $17 million project purchase price. And then we had about $12 million capital expenditure on it. So in total, sources and usage were in total about 30 to 33 million.
So it's a big CapEx, 12 million.
It was a big complex. We had done a lot of work to number one, do all the due diligence, financing, all the architect renderings, all the capital expenditure budget, fine tuning the budgets. We had done a lot of work on that. But even after that, what we are doing is in that range, 450 units in Huntsville right now. Basically that's how we learned. I mean, that's how I learned my business.
Okay, nice. Then this property, is it a Class C or?
Yeah, it would be. It was a Class C asset in an upcoming area. There were a bunch of new construction happening around the property. The asset was actually the asset really got dilapidated because of the rains that happened. There's some thunderstorm, and the current owner did not fix that.
Oh, the
roofs and stuff. So it kind of went bad, and he just wanted to get out of the deal. Basically, he had some bad debts. So overall, the deal was good, but there were not many lenders out there for us to give us the bridge loan. That was our challenge.
Yeah, and also I think it has like 50% occupancy, right? Yeah, I guess that's the main.
That was the main trouble, because I mean, you will not get the loan
and the cash.
Yeah.
Okay, then were you able to get like a T12 and rent roll from the owner? Or?
Yes. The owner was cooperative. He was giving us, I mean, even though our contract was only 3 months contract, but he was cooperative. He was extending the contracts. But every time we were extending, we are putting $100,000 or $50,000 in there, and he was cooperating. He was giving a T12, he was giving us rent roll, he would do anything that we would ask for, insurance,
Yeah.
loss run report, anything.
Okay.
So
Then, yeah, for the T12 and rent roll, do you see any kind of a red flag that you recall?
see, number one on the project, it was 50% occupied. That was number. Other 50% were down units, right? They were not up and running.
Oh,
So in terms of delinquency was very little. I mean, not too much. Remaining 50% was okay, kind of. Uh, uh, but there are red flags. I mean, on a C-class asset, you will always have some tenants who are not paying the rent. So there was some, maybe 1 or 2% like that, but nothing extraordinary except that we had a lot of down units. Our rents were very low markets, I mean below markets, because of the area and because of the situation that apartment complex was in. So yeah,
okay.
yeah.
Okay, yeah, that's nice. Then yeah, so for the price, right? So the original asking price was around 15,
Yeah,
16.
original asking price was about 50, maybe a little less. I don't remember that. It was 4 or 5 years ago.
Okay.
Maybe, yeah, in that range, it was less. The cost basis was below 30,000. I think it was only 22,
Per
25,000.
per door. Okay.
Yeah.
Yep. Then I yeah, for then new purchase price is around that 15. Then yeah, economic vacancy is 50%. Then
Yeah.
how was the financing breakdown with this? Like how did the one that the private equity?
Yeah. So no, so private equity came at a later stage, right? I
Oh,
mean, we
later.
had to raise we had to do our own raise. We had
Oh,
to
own raise. Okay.
raise like 10, 11 million. And that being the first deal, we were nowhere near to raising that much, 9 million, something like that. We had raised like 5 million, but we were still short 4 or whatever.
Okay.
So we found somebody who was willing to invest in that deal. Or he wanted to bring in maybe 3 or 3.5, 4, something like that. That deal, and rest was our money. Basically, we had collected 4 or 5 million there. So there was a big chunk of money that a private equity investor was bringing to the table.
Okay.
But that he came towards the end. He didn't come from the beginning. We were targeting to
To raise.
raise whatever the whole thing, but unfortunately, because of the construction budget and the bridge lending, we had to go through 5 bridge lenders. They had given us the term sheet, but after 20 days they backed out. Then we went to another one. After 20 days they backed out. Then we went to the third one. So we were losing time.
Yeah.
Our budget was going up, more and more basically. So our raise was going. In other words, our raise was going up, and because of that, our original raise was like 7 million. We were comfortable, but it went up to like 9.5. So we ended up finding somebody, like in a private equity space, and they were able to help us out. They were willing to help us out.
Yep.
That's how
Yeah,
our
that's
raise
good.
was complete, basically.
Yeah. Then what did it end up with? Like at least for the financing, were you able to find or
No, yeah, the financing was bridge lending. Basically, it was a 3 year, something like that. 2 year IO, interest only, 3 year loan with 2 extensions, 1+1. So total, it could have been 5%, 5 year worth of loan with a 2 year interest only in the beginning.
okay.
So yeah, 3 year with 2 possible extensions with 1 point each. So
1
you
year
give
each. Okay.
one, yeah. So initially you give like 2 points, one to the broker, one and a half to the lender, and then they give you 3 years loan, which is 2 years IO, And after 3 years, if you need an extension, for every extension, you need 1 point.
1.2. Okay.
Yeah.
Then each extension, how many years is it? Like 1 year extension, 1 year extension.
1 year extension. So total loan was 5 years.
5 years. Okay.
Yeah. But the
Then,
goal, our goal was that we would refinance that within 2.5 years, basically.
Okay. Okay. Then how much was the loan interest on this?
Yeah, the loan interest, I would not remember that because long time. I think it was more than 7%, more than 6%, 6.5 in that range, anywhere from 6 to 7 at that point. Of course, these bridge loans are floaters, right? So
Yes, yeah.
they go up and down depending upon the market.
Okay. Then the loan term is 5 years. Then so for this one, like this was a syndication, right? So you brought some investors or
Yes,
it's
it was
just
it was no. It was syndication. It was we had bunch of investors, not some. We had
okay.
30-40 investors. We had raised 5 million.
Okay. Then what was the investor split, if you recall, on this?
Investor split was 80-20 on this deal.
80-20. Okay.
Yeah.
Then was there any preferred return or?
We had 10. I think we had 10 preferential rate of return was 10%. I mean, the deal was sweet deal. I mean,
Yeah,
if it was all said and done, it was like 2.75 in 5 years, 2.75x in 5 years. So deal was almost annualized, was almost like 25-30% annualized return. I mean, anywhere from 20 to 25% annualized return on the deal.
That's good. Yep.
Even more than 25, actually 27-28% annualized return.
Okay. Then for this one, right? So you mentioned like you were bought off by the private equity. So the investors that invested on your syndication for that 5 million. So the private equity returned the 5 million, or how did it work?
No, so the money was in the escrow, right? So it's not that we had given the money. So our money was it was before the closing. So
Correct.
they could not touch our money anyway. So our money was with us.
Oh, okay. So they did.
Yeah, so they just whatever money was deposited in terms of hard money or hard costs that we had before closing the deal, that was returned to us the same day. Basically, next day they paid us off. They made us whole, basically.
Oh, okay. So then you just returned everything got returned to the investors. Okay.
Yes, everything got returned to the investors. Yeah.
They didn't. Was just wondering, did they give you any kind of extra because you brought the deal?
Yeah, they did. They did pay us 1% for fees, basically, but that 1% was not it wasn't really. Correct. It was just a token, and I mean, it's good that they at least considered that.
Yep.
So it was good enough. They were not blatantly, unethical. Yes, 1% for putting together the deal. I mean, we spent 6 months. Well, everything was given to them on a platter, basically.
Yeah, then they
just did the closing. They cut the check and they did the closing.
Yeah, it's kind of a wholesale to them.
Yeah, wholesale to them with everything in place.
Correct. Yeah.
Lending in place, contracting in place, all the contracts, all the budgets, all the everything was in place. All they had to do is just change the name from our name to their name, and they were able to make it happen. They closed it in a week's time after that. I mean, something that took us 6 months to put together, they just closed it in a week's time.
Mm-hmm. Yeah. And I think, and also like all the documents, everything was already there on a silver platter.
Everything, you name it. It's like all they had to do just change all the documents, just change their names, and that's it, and
Yeah,
cut
and
the
they
check.
are correct, and they have the cash because of their private equity. Yep.
Yes, they had the cash. They, instead of giving, instead of cutting $5 million check, they cut the $10 million check, and that's about it.
Yeah.
So they took over the deal basically.
Okay. Yeah. Then let's go to the next section of the show, which is the due diligence portion. If you recall, like what the different due diligence that you did on this property.
Yeah, so due diligence was very, very comprehensive due diligence. I must say that because we had to look at the area, we had to look at the comps of the area. So we had gone there multiple times. We had done the shopping, secret shopping in the apartment complex nearby to find the to find the really basically find the comparables, and we had looked at a lot of areas within 3 miles, 2 miles, to see what are the upcoming constructions happening in that area. In addition to that, regular due diligence for sure, rent roll, T12 analysis of the rent roll and T12, that was needed on a regular basis. Any insurance loss run report, we were checking that on a very regular basis, that current owner is filing any claims or not. In addition to that, we wanted to like compare apple to apples. We were looking at other apartment complexes who had chillers. Our place did not have chillers. What were they doing and what were we doing? And those were different. What are the things that we could do around the property? Should it be, uh, should we spend more money outside to make it look nicer? So it was not just the due diligence part. It was more of I must say that more of construction. How much construction did we want to do in that property? What was the future business plan that we wanted to implement in that project? That was the difficult part, because there were properties next door who are not so good, and there were properties next door which were very good. So we had to decide what do we want to do in that project to be able to achieve the rent growth that we wanted to achieve.
Yeah.
So due diligence was not so difficult. It's more of lending was very difficult. Getting the contractors to give us the estimates, that was difficult. Deciding what we wanted to do on the property from a technical standpoint, that was bad. I mean, bad in the sense that took us a long time.
Okay. Yep. And thanks for that one. Then going to the other section of regarding the capital raise. I know, like you mentioned about that you at least overall capital raise reached up to the 9 million. Then you were able to raise at least 5 million of it. Do you recall like how many investors were that for that 5 million, at least that portion?
Yeah, we had about 35 investors in that 5 million, 5 million. I don't remember the actual number, but at least 35 investor, because our minimum was 100. We were enforcing that. We were not taking 50,000 from
Okay,
anybody.
100. Okay.
Yeah, so that's why, and there were not many investors who would give more than 100K.
Yeah.
So that, basically, overall it was not, like 35 investors basically.
Yeah. Then how many days or weeks did you do? I mean, did you raise this?
It took us a long time. That was our first deal. It took us a long time. I mean, we spent like 2-3 months, not just raising the money. It was more of like on the lender side, because we were having trouble. But the capital raise took a long time. I mean, we were able to just raise only I would say at least 2 months worth of consistent effort.
To find at least
Yeah,
some investors. Yep.
yeah.
Then for the closing, like how much do you? I don't know if you still recall like how much was the closing cost of the deal.
The closing cost was substantial because we had expenses, we had, finance broker, we had, other expenses. We had done many extensions, so we have a lot of expenses from, phase one, appraisals, lenders. I would not remember the total closing cost. Plus, we had our fees in that.
Okay, yeah,
But the
1%.
closing cost must be at least 250 range,
To
250,000.
200 to 250,000.
Yeah, at least that much.
Okay.
I would say it was more than that, maybe 300, but I wouldn't remember that.
Okay. Then how long did it take from like LOI to closing on this one?
6 months. 6 months.
Okay.
Yes, it was 6 month deal. LOI. When we bought it from a wholesaler, we had 2 months on the contract. Then we had to go for 2 or 3 extensions. So
Okay.
it was. I remember distinctly starting on the deal maybe October, November time frame, and it was February when we were about to close. So 5 to 6 months before we got the deal, and the wholesaler who had gotten the deal was like before us. So it was a 6 month project basically.
Okay, fine. Thanks. Yeah, I think we reached to the end of the show where I asked every guest these final 5 sizzling questions. So question number 1, any lessons learned that you want to share from deal analysis, due diligence, capital raise, and closing experience?
See, all I can say is unless you jump into the river, you do not know how to swim, right? Unless you jump into the water. We had many experiences. There's no shortage of that. But I must say one thing, that we did a very big deal, which is sometime very, yes, we would have done it. But on the other side, I think that maybe it was good that we did not do it, because probably we did not have enough experience. So one thing is learn to walk before you start thinking of running, right? Maybe take your time to learn the business properly, and then you start doing the bigger deals. If you push too hard, sometimes it may fall. It may be a little difficult to do it. So that's overall broader perspective, that maybe start with a smaller deal and then go into the bigger deals. But as far as the lending part is concerned, yes, lenders are out there, but they are there to secure their interest first, right? So they want to secure their interest first, and Wall Street is the most conservative business. So they secure their interest first. They want to make money first, and they want to see whether you can make them money. So that's the real purpose of lending business, right? So always remember that. That's number one. And in terms of the deal analysis, have good underwriters on your team. Otherwise, it will not work out very well, because underwriting is it's just not numbers. There are a lot of things that go in the underwriting, and maybe we cannot talk in this short time frame here. But underwriting and what you really want to do, maybe hire a mentor to do the right thing. It's always worth hiring a mentor, who can help you in your initial deals, basically. And capital raise, start with your own friends and family members, because they are the one who trust you. And once you have 1 or 2 deals under your belt, then it is easier for you to do the capital raise. So yeah, all in all, these are my experiences.
Okay. Yeah. Yeah. Thanks. And also, I think just to add, like, especially to our listeners, that whenever you're jumping into a deal, like, don't rush it. Like, just to get the first deal, and also especially the capital raising. Like, some people are saying like, yeah, if you have a good deal, the money will follow. No. So
Yeah,
yeah, it's not
that's
single
money.
family. You can say that maybe, but on the multifamily, you need to
Yeah.
make sure like you have a capital in line.
Yes, yeah, yeah. Money will come only if you have contacts, right? I mean, if you
Yes,
don't
yeah,
have contacts, where will the money come from? It's not falling from the sky.
correct,
So
correct.
if you have a deal, you need to work. You need to. I mean, you have to live your life unless you want to live miserable life in tension and stress. What's the purpose? So
Correct.
build
Yep.
cover your bases before you jump into something bigger.
Yep. Yep. Then yeah, for the second question, any recommended books?
Well, I'm not a good reader. I don't read too much. I just listen to a lot of, you know, a lot. I join these meetings and stuff. I have bought a lot of books, and if I show you my bookshelf, you will see all the books. But I personally don't have any recommendations, and I apologize for that.
Okay, no, no worries. Then yeah. Then any recommended podcast or podcast that you're listening?
Yeah, I mean, no listening, no reading. That's how I am. I do talk to a lot of people,
Mm-hmm.
and I try to network with them. But the way I am built, my human anatomy is I don't have time to watch or listen to podcasts
Okay.
or read any books. But I do have a lot of mentors. I do have a lot of people whom I spend time with, and I learn from them, from their experiences, not just worldly books, or not just plain simple words. So I like to learn my things through my own experience.
Mm-hmm. Yeah. And I think for our listeners out there, like yeah, if you will be listening, I mean, if you will be targeting like a podcast, make sure at least focus on few, because if there's tons of podcasts out there, you could just be lost
Yeah, yeah,
in the trail that. But if you have if you kind of like a person, then just follow everything on that person one at a time. So don't jump multiple podcasts like
yeah.
so, or else like you will tend to now kind of okay, listening, but now you need to take action, but you keep on listening, so keep on learning, so you need to take at some point take action.
Yes, yes, yeah. I don't believe in just listening. I like to
Yeah.
do things. I do a lot of things. I buy a lot of assets. I underwrite a lot of assets. So overall, I mean, I like Joe Fearless. Joe Fearless's book. I bought it, but I hardly opened it, so I cannot recommend that. I have other books also, which but I like to continue to do a lot of things. I do a lot of marketing. I do a lot of underwriting. I do buy assets, and I help others. More than just doing it for myself, I like to spend time helping others, because I am of the belief that when I help others, I get something back out of it. What it is, I do not know, and I don't care. But my goal is to continue to help others and grow from that perspective.
Yes, yeah, that's a good point. Like especially like if you're starting new, I think when you want to find someone to network with, try to bring some value. Like you can ask like what value you can add instead of asking help directly, because
Yeah,
some people like enter in this multifamily by just providing value. Then
yeah.
eventually they get into this partnership. Then now they have a GP on their belt.
That is correct. Yeah, that is correct. That's how I had entered in one of the deals.
Yeah.
I was just helping others. I had not hired any mentor at that time, but I ended up learning a lot.
Yeah, that's good. Then yeah, the fourth question is this is the time to promote yourself. So what's your acquisition criteria for multifamily in terms of location, units, class? So this is to let everyone know and reach out
Yeah,
to you if they have any deals in those areas.
Yeah, so I am looking for deals in Indianapolis, Atlanta, Huntsville, and Houston. These are the 4 areas where I'm looking at the deals. And Houston means, southwest, Houston, Oklahoma, in that range, Texas, in that area. So I do not look for deals less than 100 units. I typically look for 100 to 300, anywhere in that range. Typically B minus, C plus asset class in a relatively better area, and with some value add in it. With value add left in it. Not just the meat on the bone. Somebody else has done the work, and I don't want to look at the deals where somebody is leaving the money on the table for us. Not that kind of deal. I want to start from the scratch in the deal. And if anybody has anything, I would love to pay them the finder's fee. I mean, if it is a 200,000, if it is 200 unit deal, I would give them $50,000 as the finder's fee. I have no problem with that. And in addition to my multifamily syndication business, as I said, I have assisted living business also. And I recently launched my website, MyRealtyGains.com, MyRealtyGains.com, and I have a 7-day passive investing course for you. That is free course. Feel free to subscribe to that. Go to my website. You can subscribe to an email only course, and through the email, you will have access to membership area where you will have a lot of videos for passive investing, and eventually you can talk to me. We can discuss how we can help you out in your passive investing initiatives.
Yep. Okay, that's nice. Then, for the last question is, what's the best way to contact you?
Yeah, I mean, there are many avenues. As I said, the name of my company is visible in my logo, My Realty Gains. Prashant at MyRealtyGains.com. That's my email address. And on Facebook, LinkedIn, my website is www.myrealtygains.com and www.multifamilyrealtygains.com. You have my contact information, cell phone number, you name it, everything is out there.
Okay, that's nice. And also, I will put your website in the show notes and your contact information.
So, sounds good. Sounds good. No, they're very good. Jefferson, thank you so much. If this is the end, I really, really appreciate you taking time.
Thank you to Prashant for being a guest. Thanks a lot.
Thank you. Thank you so much, sir.
Okay, bye.